The big thing that everyone needs to know is the 1099 is changing this year. So Coinbase or exchanges, wherever you're onboarding, off-ramping your crypto, they're going to send you a 1099 if you took any profits. Coinbase is already releasing theirs. Gemini released theirs. I'm talking with Kraken right now. They're about to release theirs. It's coming. It's already happening. Count on Sheep itself will always be, a stay in your lane, bring your own CPA, or file it yourself, because that way we're not stepping on anyone's toes or that kind of thing.
What do you think has gotten you to the point of where you are today?
It's got to be perseverance.
Welcome everyone to another edition of Late Night on Base. I'm your host, Bill the Bull, back at it this time in person in the studio. These are the podcasts I repeat, love to do. Today we have Nick from Count on Sheep. You might remember him. We did a podcast September of 2024. Well, he's back. There's a lot more to discuss, new tax regulations coming up. So, Nick, my friend, how are you doing?
Awesome, Bill. How are you doing?
Bro, I can't complain. I love the fact that you're down to come here. We're doing it in person. It's been far too long.
Love coming to LA. Love coming to see you. Love watching the base community grow. It's been absolutely insane in the last few years. So getting all caught up here just makes perfect sense.
For sure, man. So tell us, maybe for those that are unfamiliar, obviously we've grown our channel a lot. Shout out to you for being one of the few back in the day, but you've come a long way. I've come a long way. But for those that might not know, what exactly is Count on Sheep?
So Count on Sheep is my crypto tax firm that I created because I was losing sleep over my crypto taxes. Excuse me. I was losing sleep over my crypto taxes. So we called it Count on Sheep. We thought that'd be a fun play on words for it. And but it's funny. That's a lot of people are coming to us and they still say that on the phone calls. They're like, hey, before we found you guys, I was losing sleep over my crypto taxes. And we keep hearing that narrative. So I keep supporting our brand. And we've grown significantly over the last few years, helping people with their crypto taxes specifically.
When was it established?
We started this in 2022, kind of incubated it with another company that I have that kind of incubates my companies. Mind you, I have a small venture fund. And then we popped this one out in, call it late 2023, early 2024, into its own LLC and started running with it. So we've done 3 tax seasons so far. And
talk to us about the tax seasons that you had, because you launched basically at a bear market. 2022, 2023.
It's terrible.
Yeah. What was that like?
Well, one of the interesting things that we were finding in the bear market is, that when we were starting to deal with people that were high net worth at first, and that was kind of my situation. I sold my company. I had a digital marketing agency. We were probably top 3 in the US at the time when we sold. And, that was a good run for me, and it brought a lot of blessings and also, it brought, more money, more problems.
Sure.
So with my crypto, I was, been a collector since 2015. And, when I was going through that acquisition period, they were not just looking at my company, they were also looking at my holdings, and that includes my crypto. Everything else was all sorted by the big 4 that were my accountants at the time. But my crypto became into question, like, okay, well, have you reconciled this? I go, I know I had to reconcile this. And they said, absolutely you do. And I said, well, why don't you do it for me? And then ultimately they couldn't. And that was the big 4. And if you guys don't understand the big 4 accounting agencies are the largest in the world. They're the 4 largest accounting agencies globally that do the biggest accounts.
What is it again? Is it like Deloitte?
It's Deloitte, Ernst & Young, KPMG, PricewaterhouseCoopers. Mm-hmm. Yeah.
So they couldn't handle your taxes.
They couldn't figure it out. So light bulb goes off. I'm about, I'm on, one step out the door on my marketing agency after we sold it.
Yeah.
And I'm like, what am I going to do next? I don't want to necessarily retire. I still have some, some passion to go out and do stuff. And I didn't think, it was going to be accounting by any means, but crypto needed a hero in the accounting department. So I answered the call, put some guys in a room. We R&D'd this for a year, came up with the SOPs for, tax, blockchain accounting, and we ran with it. And, 3 years later, we're doing really well. We're growing at the fastest rate in the industry.
Yeah.
And we're here.
I love to hear that. And I love the fact that you successfully sold a company and you didn't go to a beach somewhere. You have that entrepreneur spirit. I feel you, man, because it's kind of like, what are you going to do? There's only so much drinks you can have at a beach. You have that passion.
To be fair, I took a little bit of time off and, was hanging out with my wife, and we were,
that's good. Family time,
for a minute.
Family time, but eventually you come back.
Call me back.
Yeah, I know. That's the alpha spirit in you. So, okay. So for this episode, I want to talk to our listeners about, what they need to know about taxes, the good, the bad, the new regulations.
Cool.
And I also want to, because a big focus of mine is to also give inspiration to others, whether they're building, whether they're creating, how to be successful. Because
Right.
I think that's extremely important. And you obviously have done it very well. So let's start with the
Appreciate it.
taxes. What is it about taxes that you think most crypto investors don't know?
Right. So this is the year that is going to define all tax years.
Okay.
Before then, we were kind of in this area of like not a lot of guidance, but there was enough guidance, and you should have been filing your crypto tax, but some people weren't, some people were, and people are kind of on the, hey, isn't this anonymous? I'm like,
Sure.
oh, well, I'm answering this question all the time. Like, no, blockchain is the least anonymous thing. It is a global ledger that anyone can access, and we can look at each block individually. So it is not like everyone knows, what's moving around and everyone can see it. So that's the first myth I want to blow out of the, the room today. The other one is, I'm not going to come in here and just drop a bunch of boring tax stuff.
Yeah.
I'll leave that for my CPAs and the guys that work for me. But the big thing that everyone needs to know is the 1099 is changing this year. So Coinbase or exchanges, wherever you're onboarding, off-ramping your crypto, they're going to send you a 1099 if you took any profits. And what's really cool about this year, like quick asterisk on this, is the fact that a lot of people took profits. A lot of people have been listening to people that have been through multiple cycles. And that was the narrative in the bull market, like, hey, or in the bear market. And then when the bull market comes, like, let's take some profits this time.
Sure.
And I'm starting to see it. Like with our, people that work with us, our clients took a lot of profits. So it's kind of cool. But that causes taxable events. Typically, you get 1099 if you spend over $600. If you sold for over $600, you'll get a 1099. But now this year, they're calling it the 1099 DA for digital assets. So now the IRS is putting your digital assets, your portfolio, underneath a microscope, and they're looking at digital assets specifically. So now if you thought you were anonymous and you were just mixing your 1099 DAs together, oh no, there's one for us in crypto. So I think that's the biggest thing that I really want to push forward with people is the 1099 DA is coming out. That means the IRS has their finger on us. And now we're on the radar for, so if it was ever a question, now that's the issue. Now there's a bigger issue here. So the 1099 DA is only going to report your proceeds. So say you're at, you had a Bitcoin. So you decided to get out of Bitcoin. I don't know why you would, but if you did, you sold a Bitcoin, you took some cash off the table. Say you sold it for 100,000. Say you picked up that Bitcoin at 50,000.
Sure.
Well, 50,000 is what you bought it on Coinbase, for instance. And that's your cost basis. That's what you bought it for. You don't pay taxes on what you buy things for. You pay on the gains.
Sure.
So you sold for 100,000, your gain was 50,000. That's what you should be paying taxes on. But this 1099 DA, they're not requiring them to put in that cost basis, what you acquired it for. That's gonna be left blank. And if you leave that blank, it's gonna get a 0.
Yeah.
So now you're paying taxes on your whole 100,000. All the, that whole gain you basically got is getting wiped out in taxes. So, whoa. I mean, it's a big year. I mean, we really need to think about this. We need to get this message out to the community. I'm working with all sorts of KOLs. I'm working, with you, Bill. Yeah. And I mean, that's the big thing is I want people to see this coming because they're going to be like, ouch, like you can't make money in crypto. It all goes to taxes. No. It's because you calculate your cost basis and fill it in yourself. And yes, I wish they would do it for you. That would be, ideal. That's what happens when you're trading in securities.
For sure.
But not in crypto. We got to do it ourselves.
So that's a big point because obviously getting taxed on 100,000 versus the actual just the gain of 50,000 is a massive difference. So it's up to the individual to understand there's no cost basis that they provide. You have to provide it.
That's
correct?
it. I mean, that, in that example, you're paying double the tax. You're paying 50,000 on the gain, which you would usually pay on, you would pay on, and then $50,000 on the cost basis, which you should not be paying taxes on your cost basis. That's not taxable. So in this scenario, it is. They're going to leave that blank. They're going to say what the proceeds or what you got paid in cash and or traded out for a stable or however you did it.
So this 1099 DA, as you call it, it's coming out this year.
Yes, it's already, Coinbase is already releasing theirs. Gemini released theirs. I'm talking with Kraken right now. They're about to release theirs. So it's it's coming. It's already happening.
And this is for the 2025 tax season?
This is 2025 tax season. So everything you did last year is what's being counted.
Yes.
And then, this is coming due April 15th. So that's when, it's due. And or you can file for extension. You still have to pay what your estimated, what you owe.
Why would someone pay for an extension, or why would someone want an extension?
Because you want to give time to think. I mean, this is every wealthy person I know is on extension. And I think, and that's available to everybody. And I say, why wouldn't you? You do have to still pay on April 15th, but you get an estimated payment. But then you get to carefully and methodically go through your taxes, especially your blockchain, and what we'll talk about digital asset reconciliation in a minute. You have time to do this during the summer. Then you're not panicked. You go to work, take your kids on vacation, your family, come back and you can deal with your taxes, in the fall, in October 15th. So I think it's a great thing to do. It gives you more time to think. It gives you more runway. You can have people and I'm not trying to plug ourselves, but it gives us time to go through if you want to hire a service to do this for you. Yeah. So it's a great reason to go through it. And you can do that for the rest. And that's your entire tax. It's not just your crypto. So when you file an extension, you can go through and look at everything carefully, look at areas of savings. You can look at different rebates you took. Maybe you put solar on your house this year. Oh God, I have to go figure out that solar rebate. Why slam everything in the beginning of the year when you can buy yourself more runway?
Interesting. All right, so now let's take it to you were saying the digital reconciliation.
Yes.
Let's talk more about that.
So digital asset reconciliation, or DAR is what we're calling it. It's kind of like what we developed as our SOP, here at Count on Sheep. So that's going through, and yes, there's a lot of DIY softwares out there. Shout out to Coinly, shout out to, a lot of these other ones. Coinly's our preferred partner, but I mean, there's CoinTracker, CoinTracking, CoinLedger. There's so many, and Silicon Valley was smart. I mean, they saw this coming. They're like, hey, we're going to design a software and sell it for $1 billion. But now there's like 15 softwares out there. Think about like QuickBooks for business. Yeah. There's like 15 of those for crypto. And we found Coinly to be the best, and that's the one that our accountants like to work on. But there's a lot of other ones that people use. But we've basically become the pilots for those planes. And now you can get in there, and instead of you just loading up your software and trying to figure out every single trade and how, if you're meeting the proper criteria for accounting and you're doing the right guidance, we'll just do it for you. And I mean, that's really kind of how we built our business, because a lot of people, these were sold as DIY, but then you get in there and it's very confusing. And also, if you're missing wallets, you don't know where they are, it's hard for you to identify that and know where they are. So we've kind of created the go around for that, and we've created a service that will basically white glove it for you.
So you guys, so for those listening, you guys do a white glove service.
Yeah.
So that's all nuts and bolts that come in. So if I'm an investor, I don't want to deal with this, I call you guys.
Right.
You handle it.
That's it. And I mean, there is a caveat to that. I mean, you have to be a little hands-on. Anyone who likes privacy like I do in this community is going to know that, when you get your Coinly account and you get your license, we'll provide one for you, but you get to sign into it yourself. You keep control of it. You keep all of that, and then you give us access, and it's view only. So, I mean, we're able to actually make changes there, but I'm saying view only as in it mirrors your portfolios. It is not sucking in your coins into the software.
For sure.
So we're just mirroring them so we can see what's going on, and then we can reconcile correctly. But we never have access to your keys. We never have access to any of this. So it's just mirroring what your portfolio is saying, and then we can actually figure out the accounting picture underneath. But the biggest thing is what I hear from people, and this was when I first did it for myself, was I pulled in all my data for the first time, and I had 12 different exchanges. Yeah. I had, dozens of different wallets sitting out there all over the place. I didn't know where the hell everything was at one point. And being able to pull that all into scope was like, okay, that was a big breath of fresh air. I'm like, at least it's all here, and I can see it on this one platform. But then came the hard part. It's like, okay, well, how do I piece it all together? And how do I know which ones connect? And how do I know if I'm doing this right? How do I know if, this gets audited, I'm going to be at fault? So, I mean, these platforms are great, but they only provide the calculator for you. But if you put in the wrong calculations, it's still on you.
Interesting. And so would you say it's a fair assessment that like your guys' service, or even for those tuning in, it's for the traders, right? Because if I just trade one time a year,
right?
I mean, there's not really much. It's just like, I know when I bought, I know when I sold. I wouldn't necessarily need it, but those that have, especially in our industry, thousands. Yeah. Would you say that's a fair assessment? I
would say we have a lot of traders. I would say, we have everyone from my mom, who has like an Ethereum and a Bitcoin that she got at, Thanksgiving in 2017. Wow.
Okay.
To, we have people that have large trusts that have thousands and thousands of Bitcoin and other assets. And then it's traders and everybody in between, the novice, It doesn't matter. This problem affects everybody. And Brian Armstrong actually said the best on Coinbase is he's all like, hey, our 1099s might be incorrect, even that we're giving you, even if you kept all your coins on Coinbase. But it's like, if you move it to its cold storage, which, a lot of people, you're supposed to do that, take control of your own keys. That's preached a lot. And, you put in cold storage. Well, the minute it leaves is the problem where you have an issue. So if you, send your Ethereum to a cold wallet, cold storage, and then you pull it back, Coinbase is going to report that as you sold it, because it doesn't know how to wallet match. It doesn't know that you own that, because what you really did is just took a $20 bill and took it from one pocket and put it in your other. It's the same wallet, right? Same pockets on your jeans, right? So they're not seeing it that way because it's decentralized, and that's the beauty of what we do. But also it causes a accounting nightmare. So that decentralization and them the cold wallet not being able to report cost basis to Coinbase is basically that's where we get in there and stitch everything together for you.
Interesting. And I think it's also important to know too that the taxes, working with a professional like you, your firm not only helps you account for what you might owe, but it also can help you get losses.
Yeah.
Talk to us about how losses work when it comes to reporting taxes.
This is a great one. I mean, we went full circle on this too. Like, we started this in a bear market, and that was kind of our come to market strategy. Was like, we realized that wealthy people didn't care which way the market was going. And that sounds crazy, because all we're taught is gains.
Yeah.
No. The wealthy are licking their chops, we noticed, when the market's going down. And why would that be? Well, it's because they're tax loss harvesting. That means they're looking at their portfolio, they're scrutinizing it, and they're basically taking losses against future gains. So they don't worry if they got into a meme coin, they got rugged. They're like, that one's out. We're taking the loss right now. It's those people that hold on to them and thinking that it's going to come back someday, and it never does. And instead of taking that loss against your future gains on your other assets, that's where the big mistake is being made. So, we see a lot of people that come to us in Q4, Q3, they start planning, and they pull up their portfolio, and they just literally start being, okay, this one's down, this one's down. They saw Bitcoin, the whole industry as a whole, take a tank at the end of the year. People were, the high net worth clients that we have were laughing. The other clients we have were panicking. And it's like, no, there's no panic here. Just look at your portfolio. This always does come back up, ebbs and flows. But take the losses now of the coins that aren't performing, and carry those losses against your future gains. It's that simple. So
how much per year can you take as a loss?
So you can take 3,000 as an individual.
Okay.
If you're just thinking about across income. So if your W-2 income, it's $3,000. But if it's bigger than that, you're like, well, people lose tens of thousands sometimes. Well, you can carry that forward each year. So for many, many years. So you can stack that forward for you. Now, if it's against a gain, now this gets interesting. You can take a big loss against your gain. So, for instance, you sold a house. And you're like, oh man, I have a ton of capital gains. Long term. Well, maybe you were holding some whatever coin, some Solana, and you got rid of it, and you took a big capital gain loss. Those will offset each other.
Interesting. So that could be more than 3,000.
Exactly.
Because you're going from capital gain to capital loss.
Right. You have to match them. So
and it doesn't matter if it's a short-term capital loss. Say my crypto was in less than a year, $10,000, but then you have your house, or like say it's a long-term. Long-term capital loss, and then a short-term capital gain for the house.
Yeah. So that's typically not going to match up.
Okay,
so it's
so you have to match.
So you have to match. But it's funny. It does come down though. Like if you don't have any long-term caps, and you had a long-term loss, then it will start offsetting your short-term. And then if that, then you don't have any there, it goes down to your income. Your W-2 income, and then that will offset. So it gets, it will start tearing down based on which capital gain you had for that season.
Yeah, I mean, listen, I think a firm like yours is for the listeners tuning in. I mean, again, this bull market hasn't been that great. Let's just be honest. Yes, Bitcoin did well, but alts did not. So we might be sitting on people not having those gains, but there's also people who've experienced losses. So regardless if there's gains or there are losses, a firm like yours is able to get to the bottom of it.
Yeah, well, we'll help you, play it both ways. Another thing is, we're a keep your CPA firm. So we want to point that out there. So a lot of people are like, no, my CPA, no, keep your CPA. But we've always stayed in our lane, which is crypto. So I'll give you a little, this has been a little bit, we are choosing to, open up a new division this year, which I'll reveal in just a second. Okay. But, Count on Sheep itself will always be, stay in your lane, bring your own CPA, or file it yourself, because that way we're not stepping on anyone's toes,
Sure.
that kind of thing. And CPAs are great at a lot of things. And one of the things they're really good at is filing, and filing with the rest of your things. Some things that CPAs aren't as good at or as nuanced at is new things like blockchain,
Sure.
and understanding, how to reconcile blockchains. I think they're starting to, we're starting to see an interest there,
Yeah.
but it's nowhere near. I mean, there's just not enough people doing digital asset reconciliation that can create the crypto reports, the 8949, the Schedule D information, the Schedule 1 information, you took it as payment, and sending that to your CPA.
Yeah.
They're looking for people to prepare that, give that to them so they can file along the rest of your.
That's what you guys can provide.
Yeah.
Interesting. Now, is this only a USA based firm?
So the great thing is digital asset reconciliation is global.
Yeah.
So, what we do in terms of the reconciliation, trade, swaps, that's all seen on a global stage. The same in Canada as it is in America, in Australia and in Europe. So we do all of those areas. I put a bunch of, it's all on our website, but we have a lot of Canadian clients. So Canadian listeners will help you out as well. We can, and then you hand off to your tax professionals in Canada. What else? We have a lot of Australia. So, when after the season ends, it just gets fired up somewhere else for us around the world, which is pretty cool. So, and then you're like, well, how do you do that? That doesn't make sense. Well, the digital asset reconciliation is always done the same, but when you put it into the software, like Coinly, then that will overlay your tax liabilities, for that country, that province, that state. So that's how we do it.
So now let's just circle all this together. Obviously, there's a need of what you're providing. This industry needs something like that. And now there's this new regulations coming in with these forms.
Yeah.
Anything else that you think the viewers may need to know?
Yeah, there's one other. We talked tax loss harvesting is a big one.
Yeah.
So that's not just worry about the ups, let's worry about the downs. We talked about the 1099 DA and the cost basis not being there. Something we can provide and help you calculate. And then the other one is the cost based model. We talked about this on the last show. This was big. You used to be able to pick your cost based model. You don't want to go with last in first out.
Sure.
If you were bought an ETH at $1,000 and you bought another one at the top at 4,000. And then I said, which one did you want? You sold one. Which one do you want to sell? You're gonna probably tell me I want to say that we sold the $4,000 one, so I'm not paying any taxes, more or less. It looks like I broke even. Whereas if you said I sold the $1,000, there's a $3,000 tax liability there.
For sure.
So, cost-based modeling has changed. The government figured it out. They're like, we're going to LIFO, last in, first out. So that's the worst. That's that scenario I just gave you where it's like the $1,000. They're saying, no, I want the first one you put in because that one's always going to have the most tax liability.
Sure.
Typically, over time, things you typically grow. So therefore, LIFO is typically the worst tax outcome. Wow. So that kicked in this year. That sucks. Spec ID is what we used to use, which would kind of allow you to cherry pick the lots, and say, no, I sold this lot, not that one. So you're picking the best tax liability lots. And, you can still do that, but they made it extremely hard. And I don't know why they did it this way. I feel like the government will sometimes leave these loopholes open, but, you wonder who can only access them. But one of the things is now you have to go tell your broker every time before you make a trade, you got to run to your broker, which could be Coinbase or it could be, whoever, whatever exchange, XYZ. And you have to tell them, hey, I'm about to make this trade and I want to trade on HIFO, highest in, first out. But who has time to do that? What kind of trader do you think is going to call? This isn't like the 1950s where you call your broker. You're trading online.
Yeah.
So we're still looking to figure that one out a little bit. What we did find out, though, is you can do kind of this blanket statement where, it's in the code where you can kind of say, hey, you can tell your broker for the entire year straight up on trading HIFO all year, highest in, first out. That's always typically the best, situation for most traders. So with that said, that's something you do. We're working on a declaration here at Count on Sheep to help that. And then we're working on, basically ways to get that in front of the brokers for our clients so they can start trading the rest of the year on a better optimized tax channel.
I mean, this is just knowledge that's getting hand-fed on this channel. Again, if you don't want to have to do with any of this, learn about this, just use Nick's firm. That's what I recommend.
No boring stuff went on your show, Bill. I don't, having boring tax guys on here. I'm not going to sit there and just do math problems with people.
I knew it wouldn't be boring because I wouldn't have you on, bro.
I know. We chatted about this in the background. You're like, there's no way that's happening. I'm like, dude, I'm telling you. And it's wild, and the 1099 DA changed everything. Some people are looking at it as like, it's funny. You hear like the glass half full and the glass half empty people. Glass half empty are like most degens. There's like, hey, listen, like we're under the microscope. This isn't cool. And but yeah, I mean, it shows up like, time to, open the kimono, get this thing, taken care of, and reconciled.
Yeah.
Other people are saying, hey, look, like this is great. We're like Wall Street now, and like we're being recognized, and we're like at the table. We have a seat, and we have so much of a seat that the IRS is recognizing us as well,
Yeah.
And that's a tough pill to swallow, but it
is.
it has some, it holds a little bit of water.
No, for sure. So, talk to me about this though, dude. Like, how do you do this? Meaning, like,
Yeah.
you are a very successful man. You exited your first company. You're obviously killing it here. You still have the passion. What is your secret? What, like, honestly, like, if you had to boil it down to a quality about yourself that you think other entrepreneurs might not know about or need to have, what do you think has gotten you to the point of where you are today?
It's got to be perseverance. We're all weathering storms in our life where, it doesn't matter what level you're at. I mean, I always preach the biggie smalls problems. There is more money, more problems.
Yeah.
You start acquiring more things. Those things need more attention. Those things pull attention away from your friends, your family, things of that nature. So finding balance, but being able to push through it all, is really what it's at. And I mean, this hasn't been easy for me either. I mean, yeah, I had venture funding on this one. What was cool about Count on Sheep versus, Power Digital, my agency, was Power Digital was like one for all, all for one, with the partners, and just, we jumped off a cliff together. We built the plane on the way down, and we pulled up the nose and made it happen. That's crazy. You can do that in your 20s. I'm 40 something now.
Yeah.
So I'm like, hey,
You could take more risks.
ooh, we take more risks. I didn't have a family. I didn't have kids, that kind of thing. This was cool because I got to build the runway out in front of me. We spent a whole year. I just sat people in a room and said, we don't need to make a dime. We're losing money, but I'll pay for it. But I want to make sure we do this good. I want to make sure reputation's there. I want to make sure that this is bulletproof, that, working with Big Four auditors on our team so they know what an audit looks like, and really making sure before we take this ship out to sea, like this thing floats. And so I got paid that runway this time. And so I had a long way to take off on that in that jet, to get that thing off the runway. But at the same time, there was still trouble.
Yeah.
I had trouble with some of the hires I made. I had trouble with, just various parts of the business. It never just goes as planned. You still have to persevere. You still have to go in. You still have to get, a bad phone call, and you have to pivot, to something, a new strategy. So there's always something. But I think that's part of the fun part of being an entrepreneur too. I mean, it's infinite, problems, or infinite problems, infinite solutions.
Do you think though? So I like the fact that you said perseverance, because success isn't built overnight.
No, we'd all be, rolling
Everyone
around
would be
in
it.
gold chains.
How long
and
did it take
Range
your first
Rovers.
How long did it take your first company to from the time you created it to the time you exited? How long was it?
2012, and then the first one was in 2019.
7 years.
And then we did another one, and we sold again in 2022. So
That's 7 years of perseverance that you just said.
yeah,
You didn't have funding to start. You literally just took a nosedive. You said, fuck it, we'll see what happens.
yeah,
Yes, you were younger, so I think it is important. Like, I tell everybody, if you're in your 20s, like I'm 41 too now, a family, it's a lot different of a mindset and capabilities when you're 20 something.
right.
Literally, there's no
Right.
reason to just go for it. Not saying you can't do this at 40 plus, but
Yeah.
20, it's like,
20, you
Do it.
Yeah, you could always go back, rebuild.
Yeah.
There's no one else that's going to be hung out to dry if you don't succeed. But sometimes also I see like these huge success stories with the guys our age too.
Yeah.
because it's like it's all or nothing.
For sure.
There's no that metaphorical safety net is gone.
absolutely.
Like you can't. That's gone. You're tight roping with just the ground.
Yeah, because there's no turning back.
No.
And failure is not an option.
No.
I actually agree with that. That's actually like my mindset too. It's like I'm not getting younger, but I obviously know what I have, and it's just like I'm all in.
Yeah.
Like not eating bear market, bull market. Like I made the switch in my head. I'm like, all right, like like I'm chilling. I've gotten to a good point. Now
Right.
it's like a flip. It's like, nah, bro. Like
And
5 times faster.
100%. And I also say like working in tech is a
Yeah.
big thing. Like us working in tech, this is a technology.
Yeah.
This is changing money. This is changing the narrative on money.
Yeah.
This is huge. I mean, first comes the internet, then you change the money, then you get AI governance. And then now we're talking quantum computing, which is like folding space and time.
Wow.
I mean, like the times we live in right now. And I mean, like for the viewers, if you can just see technology as it comes. We so quickly just like, oh yeah, AI, like that's a thing, but it's like, if you really sat and thought about that, that's pretty wild, like,
We could do a whole conversation on AI.
yeah, I know that's a whole nother thing. It goes down these rabbit holes. But
Yeah.
I think that you bet on technology. But that's another big part of my success is I bet on technology. I was big into SEO, search engine optimization, as a marketer back in the day, early 2000s. And everyone was graduating college, going to all these sexy ad print companies in New York and LA. I sat behind a computer and said, I'm going to do SEO in San Diego.
Yeah.
That ended up being a huge hub for digital marketing. And that's ultimately where that happened.
All right, guys. Thank you for this episode. Nick, thanks for coming on.
Hey, really appreciate it, Bill.